which of course is the very important day because it's next to St. Patrick's Day. So it's sort of altogether very important few days. But meanwhile, oil markets have started this morning in Asia, trading at 85.68 on Brent, up about nearly less than 0.5%, but holding that move above $85, closing at the end of last week above $85, which ultimately puts us up $10 year to date in the first quarter. A significant move by any measure. But Omar Najia, Global Head of Derivatives at BB Energy, is this a breakout moment for you? WTI closing above 80, Brent closing above 85. We were sort of stuck in a tight range. Is this a move now higher?
And we've been calling this move higher since the 11th of December, 2023, when oil traded at 67. Everybody was telling me about China and what's going to think and what's going to do. So we've gone from 67 to 81 plus or minus. And people are now going to ask, is this going to be a move higher? Yes, I think basically people have missed this move higher. So we've moved, like, as you said, $10 higher. I think we're going considerably higher, yes. Over time, targets basically are 95, 119. And I think basically this is a new trend to the upside, which a lot of people don't kind of, seem to understand. So basically you have a new trend to the upside, 95, 119, and new all-time highs are on the way. Now, whether you want to say why and what's going to happen and what's the reason, all this kind of stuff, I really can't tell you, but that's what the price action, or at least its interpretation, is telling me. We are headed to new all-time highs. Same with the S&P. We said at the beginning of the year 5,900 plus, and we will get there. Bitcoin, we told everybody buy Bitcoin at 25,000, and we're at 68. We're going to go considerably higher. As we've been saying, these markets are not deflationary; they are inflationary. The US dollar is weak. The US is basically not only printing money, but running massive, never before seen deficits. And that's just going to continue on and on and on and on. So keeping your money in a bank, basically all it does is it makes you poorer, which is why people are buying, whether it be commodities, it's the S&P. And you can tell that they're not really, quote unquote, investing, but they're just shoveling it into the S&P. And the reason you can say that, or you can tell that that's happening, is because they're only buying 7 stocks: Apple, Amazon, Microsoft, etc. So there's no thought. And so that's telling you that there's a lot of cash out there, and it's all looking for homes. Whether it be Bitcoin, whether it be the S&P, or whether it be oil, we are going considerably higher, as we've been saying.
Jamie Ingram, Senior Fellow at the Middle East Economic Survey. Meanwhile, back in the land of sort of week-to-week sort of reading the tea leaves, was the move last week? Is it this week? How much of it is geopolitics driven, that we've broken out of this sort of so-called tight band we were in? We've had some serious drones attacks on Russian refinery infrastructure. We've had what appears to be a significant fracture in U.S.-Israeli relations, and the likelihood or the possibility of greater escalation in the war on Gaza. There are some, fires burning in the geopolitical premium land. Is that what's moved us out of this tight bandwidth, or is it indeed, as Omar has been calling for some time, this is the next move up?
There's definitely some geopolitical fires burning, Sean, as you say. I wouldn't put it lay too much of this on the Israel-Gaza US issue. Certainly Russian refineries getting targeted by Ukraine, that's going to be having an impact. What is it, about 350,000 barrels a day offline now, something like that. So significant refined products impact on markets there from those Ukrainian attacks. Of course, there's also some more fundamental issues going on here. The markets did take in this. Everybody expected OPEC Plus to extend their cuts a couple of weeks ago, which they duly did. That's kind of feeding into the markets. But we also saw the IEA report, which, widely mocked, but people do still follow what the IEA says. They came out, they increased their global demand forecasts They're expecting a higher call on OPEC crude. So we're seeing this position where supply is being constrained for longer by cuts, where the optimism, perhaps the market signals are suggesting that demand is going to be creeping up higher than people were expecting at the start of the year. So obviously that's going to be feeding through into prices as well.
Dr. Charles Elinas, CEO of Cyprus Natural Hydrocarbons Company and Senior Fellow at the Global Energy Center, Atlantic Council. Dr. Charles, the Ukrainian, we saw in last year occasional moments where Ukraine, with its sort of drone technology, otherwise reached deep into Russia. Now it seems a sustained targeting of energy infrastructure. Is this indeed a sustainable strategy? Can it have consequential impact on Russia's export capabilities?
I'm not so sure about that because with financial aid to Ukraine not increasing and weapons and ammunition from Europe not increasing, I don't know how long would Ukraine be able to sustain this, especially now that Putin has won the elections in Russia and he's gaining the upper hand in the war in Ukraine. And financially, he's doing also very well. I'm not sure that Ukraine will be able to sustain this position unless its fortunes change with more help from Europe and the United States.
Omar Najia, your thoughts on, I mean, with sort of big news, I suppose overnight, not so much that Putin won the election, but ultimately, what does it mean for the oil markets? And we're at the start of yet another 6-year term for President Putin. Is that bullish for the oil markets? Is it bearish? Is it neutral? Your thoughts on another 6-year term for Putin and its relevance for the oil markets?
Well, we like to look at stuff strategically as opposed to, oh, we're surprised that, demand is going up. Oh, we're surprised that demand's going down and that kind of stuff, right?
Yeah.
So strategically, this is good for basically oil prices because strategically, this is good for the BRICS. This is good for OPEC plus, people that So there's not going to be a change in leadership, we hope, anywhere in the GCC anytime soon. There's not going to be any change in leadership in Iran, not going to be any change in leadership in Russia. There's going to be lots of changes in leadership in the West. So basically, we think it's bullish for oil prices. We think it's bearish for the dollar. We think it basically reinforces our narrative, which is basically inflation for the West, bad for the West, bad for debts, bad for interest rates, bad for inflation, and good for BRICS and the other side. So bad for countries that basically print paper to buy goods, and good for people who have actual physical product that they actually sell. And we think they're going to sell it for a different kind of paper. So yes, we think this is strategically bullish because it's more of the same.
Jamie, we saw also we have a story in our digest today that Iran has raised its official selling price into Asia. Things are a little odd when Iran is raising. It must be a bullish market if Iran was selling into discounted to China for much of last year, is now raising its April light crude oil price according to reports by Reuters and others. Your thoughts on what does that tell you, Iranian confidence in the price of its light sweet crude into Asia?
I mean, definitely the market there is pretty robust for that kind of crude at the moment, and Iran certainly has very strong markets within China. It would love to have markets outside of China and Asia, but that's where all of its crude goes at the moment. I mean, yes, it shows confidence, but also the OSPs from Iran are a little bit fictional. There's only so much linkage to that goes on with their crudes, but they've suffered recently as well for trying to increase their prices a little bit more than buyers were willing to countenance, and so that's contributed to a little bit of a drop off in volumes flowing from Iran to China in recent months. So it can be seen, it can be a risky business. Whether this OSP increase actually translates into genuine price increases from Iran will I'm not 100% certain about that. But the Iranians do need to be careful with the price of their crude. There's a lot of competition out there still, despite markets tightening. Russia, for instance, is switching away from that, its export reductions to a more clear-cut crude oil production cut, which could see some of the crude oil that they are selling that competes strongly with the Iranian crude start to suffer a little bit as well. So it's interesting dynamics for sure.
Dr. Charles, I wanted to get your thoughts on the revision upwards last week by the IEA, revised up its 2024 global demand expectations. In the past, when it has done that incrementally, it has continued to do it nearly for a series of months. Your thoughts on obviously the OPEC call has always been above 2.2 million barrels a day, but IEA has been at 1.2, and now it's sort of moving it up, not massively, but up 100,000 plus barrels last week, and that could continue.
I think that will carry on. The IEA, as you know, has changed policies over the last year or so. It's gone climate change, driven by climate change, and it seems to be quite negative on oil and gas. And gradually, it seems to be changing the numbers, and the same thing will happen now. I mean, with industrial production in China, I don't know if you saw the news, industrial production in China in January and February was 7% up year on year, the highest it has been for 2 years. That to me, China, India, Brazil, all of these economies are doing better and better, and oil demand will carry on increasing. So I see the IEA revising its numbers upwards for a while yet.
Omar, I wanted to get your thoughts on a news story overnight. Bloomberg has announced a new Bloomberg Commodity Murban Crude Oil Index aimed at tracking the performance of the Murban crude oil, which of course is traded on the ICE Futures Abu Dhabi. Your thoughts on that as a development? What does it mean? What could it mean for the Murban contract and IFAD in Abu Dhabi?
I mean, if you want the honest answer, the answer is not a lot. Money goes where there's liquidity, right? Like Apple or Amazon or, ETFs on Bitcoin. Money doesn't go where basically, you have like 1,000 lots trade or 10,000 or 2,000 or whatever it is. So it's going to take a long time for Murban to be something that people can speculate on. Now,
yeah, but there's a lot of financial players who trade indices, and so this.
Yeah. So let me try and explain. So basically, Murban is really good if you want to hedge like a physical cargo because it's a different sulfur and that kind of stuff. But that's not where the oil market is in 2024, right? The oil market hasn't been there for like 30 years. So the oil market money that comes in is financial money, right? So again, if it's not to do with like, hedging physical cargoes and all that kind of stuff. Now, if you are a financial player, what you want to do is you want to buy something that is easy to buy and easy to sell. You need liquidity. You need basically lots of people to be doing the same. You don't want to be a trailblazer. So that's my opinion. I hope they're very successful and all this kind of stuff. But for me, unless there's like a, why would I trade something that trades, even if it trades 100,000 lots a day? Why would I trade that if NYMEX and ICE is trading basically, 3 million? Why?
Jamie,
I don't see the reason.
Jamie, looking at the decisions, obviously the OPEC cuts holding through the first quarter and now committed into the second quarter. This is what was seeming like a lot of idle supply, now looking like a tight market going into the second quarter. Your thoughts on whether OPEC, I mean, some forecasters at IE Week in London, particularly Rystad, I noted, were calling that OPEC could start unwinding some of their cuts by the mid-year, given the forecasted tightness in the second half. Your thoughts on where OPEC could go as this market tightens?
I mean, there's tightness and there's tightness, Sean. If oil prices are in the $90 still come that June meeting, I think there's a very good chance that OPEC plus countries decide to stick to their guns and continue with these voluntary cuts for longer, deeper into 2024, possibly out through to the end of the year. If they're making better money that way, then that would seem like a pretty rational decision. Yes, there's pressure from some countries like the UAE, for instance, which is increasing its capacity. They want to tap into that, but ultimately, if the financial rewards come from continuing to keep these volumes shut in, that's likely where they're going to go to. I think that with prices sub 100, there's not going to be much in the way of huge pressure coming from their buyers, coming from the US to relax the cuts to allow prices to start to drop off. I think we'd need to see a considerable price movement up above $100 before we start to see that pressure really starting to come to mount on OPEC to where it starts to impact their decision making. So yeah, if it's just a gradual tightening, I think there's a very good chance that they decide to stick to their guns. So you do mention, of course, the issue of starting to ease those cuts. That's going to be a big question when they do finally get around to ending these voluntary cuts. They've made it very clear that it will be a gradual process. There are still discussions within OPEC about how gradual that process is going to be. They haven't finalized for themselves that exit mechanism. So that will be an interesting one to watch when they do get around to it.
Just to follow up on that, Jamie, I know you cover a lot of the Kuwaiti refining story, and we've seen a huge increase in refining capacity in Kuwait last year, most notably the 615,000 barrel a day Al Zour refinery. How does that impact its crude? Obviously, that reduces substantially its crude exports. It just opened another refinery in Oman, 200,000 plus. I mean, it's nearly 1 million barrels between the two. What left does Kuwait have to export on crude? And how does that play into the tightness?
Yes, it's a very good point, Sean. It's not just that they've increased their domestic volumes and that's curtailing the amount of crude available. It's that a lot of what crude they are exporting is locked into very clear markets in Vietnam and Oman. We've seen now some of this is good timing as far as them and Kuwait and their buyers are concerned. We've seen, for instance, Rongsheng was always a big buyer of Kuwaiti crude. With their agreement with Saudi Arabia, they have less of an incentive to be taking a lot of Kuwaiti crude. Kuwait has less of an incentive to be selling them much crude. So both parties are happy to just say, cool, let's it's early 2024. Let's not renew those supply deals. But yeah, there's a lot less Kuwaiti crude on the market. It's interesting. We've seen that Kuwait has actually been getting, last year it's the value of its refined products exports hit a record high for them. It crossed $25 billion for the first time. That's even more than in 2022 when we were seeing record margins on a lot of these products that they were selling. So that's a clear benefit for Kuwait in terms of they're moving up the value chain, and that shielded them a lot last year from the drop off in prices that hit other petroleum producers within the region.
Dr. Charles, I wanted to get your thoughts on the ongoing conflict, obviously Israel conflict in Gaza, the impact that may have, could have, is having on the development of the East Med, which was pre-October 7th, sort of picking up momentum again, particularly in Egypt. What impact this conflict could have on the development of the East Med?
Well, it's having an impact already. I mean, BP and ADNOC have shelved their 50% purchase of NewMed shares, and they have shifted their emphasis to Egypt. They have now formed a new JV to invest in Egypt. But Egypt's problems in terms of gas increase irrespective of the Gaza problem. The biggest gas field, Zohr, is not doing very well. Apparently, it's not the biggest anymore. New data show that the size of Zohr is not what it was reported to be. It could be a third of the 30 TCF reported back in 2016. And production is going down and down. By the end of this year, it's expected that the production will go down 50% from its peak, and it leaves Egypt in a dire situation. As a result of that, Egypt is looking for more gas. Exports, despite the Gaza problems, exports of gas from Israel to Egypt carry on increasing. They have now reached a record. The limitation now is pipelines rather than gas availability, because Tamar and Leviathan production is expanded. Reserves are higher than they thought. And at the same time, in Cyprus, Eni and probably Chevron are expected to announce plans within a few months to export gas from Cyprus to Egypt. So Egypt is receiving a lot of attention. Its economy is not doing very well. As you probably heard, the European Commission was there over this week and pledged over 7 billion euros help to Egypt. Altogether, everybody seems to be rallying to help Egypt, and the news for Egypt is getting from bad to worse. I mean, the economy is suffering, gas is suffering, electricity production is down, electricity costs increase. It doesn't look too good. It needs all the help.
Have they all left it too late to save the patient in Egypt? We'll have to wait and see on that. Let's go to the survey question, which is looking at this question of Putin's new 6-year term in office. What impact will Putin's new 6-year term in office have on oil prices over the remainder of 2024? The bullish, bearish, no impact. Your thoughts on that? Putin's new 6-year term, not a surprise ultimately, but nonetheless, it is a fresh 6-year term in one of the top political offices in the world. Your thoughts on that? It's obviously been a major partner in underpinning the OPEC Plus strategy. Omar, we start the week as talked with Brent and WTI in that continuing that upward move we saw last week, up 4%, up again. This week we have a little bit of possible headwinds. I don't know if you would consider it such, but welcome your insights. A number of central banks meeting this week, including the Fed, the Bank of England, the Bank of Japan. Your thoughts on any changes there? Do the monetary policy makers have any impact in changing the trajectory of your upward call on the oil markets?
I think basically the Fed is going to cut. Everybody knows that. They can't afford not to, because their debt payments on interest alone are over $1 trillion, and the deficit's going to widen. So they're definitely going to cut, which is inflationary.
You expect that already this week, or maybe cut sometime this year?
No. This week I don't know, but it's cuts are coming.
Yeah.
And then the next thing is basically if you look at the EIA and the Fed, which is the most important one, they need oil prices lower. They need oil prices lower because they need to take those interest rates from 5%, call it, to 1%. They need to do that. They need to do that for the US economy. They need to make interest rates cheap again. They need to pump money into the economy, et cetera, et cetera. So it's in their interest. Everybody's selling in markets. I don't think there's anybody who's not selling. The news is being sold by people like Bloomberg, by people like Reuters. Everybody's selling. The EIA is selling its position. We think that oil prices aren't going to go up because, look, if you look at the fundamentals, we only have +1, whereas they have +2. So they're wrong, we're right, so don't buy. So you have to look at markets in that kind of framework, or at least appreciate that people are selling their own position. So I think basically that they will try, as much as they try to talk this market down, you're going to see basically the Fed lower interest rates in the face of crude WTI at $100. And the S&P at like 5,900, and at Bitcoin at like 100K. And that's going to basically show everybody that the Fed is, quote unquote, defenseless. And the only way to do anything about this debt is to basically erase the purchasing power of the US dollar even more than it has been, which will basically mean more people realize that, having $100 in the bank is useless. and they might as well buy whatever it is for.
As you said earlier, shovel it into the coal burning
Yeah.
choo-choo train. Jamie, looking at the sort of momentum moving into the second quarter now, your thoughts on the emphasis sort of shifting away from ample supply to what appears stronger than maybe expected demand. China, a lot of negative sentiment around China the first quarter, but now China's showing it has a bit of a heartbeat with some data coming out today. Consumer spending still strong there. Your thoughts on the shift from lots of supply to more focus on stronger demand?
Yeah, some of it depends on where the narrative is coming from. As Charles was saying earlier, do we expect the IEA to continue revising up demand outlooks? Yes, we do. That's going to be a voice saying, "Oh, demand is stronger than we're expecting." OPEC, of course, is going to continue saying, "Well, if we expected strong demand, what are you talking about? This is playing into our forecast entirely." I think it was very interesting last week seeing the CEO of Saudi Aramco, Amin Nasser, on results calls putting his expectations for global oil demand at about 1.5 million barrels a day this year, significantly lower than OPEC, but kind of in that range where everybody's going to be coalescing to, a little bit above where the IEA and EIA are at the moment. So, when you talk about this expectation, this feeling that the market is tightening more than people were expecting, depends who you're talking to. There's also a seasonal element to it, much as everybody knows and talks about, Q1 demand is going to be lower and then it's going to grow. When people get caught up in it, a lot of them lose track of that and they're just like, demand is growing now. Where's this coming from? Well, this is always happening. It's seasonal. We're coming out of that low demand period. People getting caught up in the fact that, demand is growing. Look at China. The IEA has been talking interestingly about how they still are relatively bearish on the outlook for demand growth from China, despite strong signals coming out of the Lunar New Year. Well, hang on, maybe the Lunar New Year being strong is actually indicative of the fact that oil demand growth in China is going to be strong overall.
Dr. Charles, last word to you on Europe. I mean, speaking of demand, Europe even seems to have a heartbeat. Weak gas prices, natural gas prices, giving Europe another reprieve this winter, and obviously offering a cheaper power supply to German industrials. Your thoughts on the outlook for Europe and as the ECB considers its position on rates?
Well, ECB is warning that we should expect more insolvencies in Europe and more upheaval in energy-intensive industries. And last year, heavy industry output in Europe went down by 1.3%. It's expected to carry on going down despite the low gas prices. Germany is still doing badly, still having problems. The news is not that brilliant. There is also a feeling that Europe is losing a bit of direction with elections coming, and the attention of the politicians at the European Commission now diverted to the elections. It's losing a bit of direction.
Losing a bit of direction. Just one last word. There's generally the view of the room is no impact from Putin. I suppose everybody says as expected. I think I would disagree with that. I was on the bullish side. I think Putin personally is drives up the bullish sentiment. Maybe doesn't create it, but certainly sustains it. Also noteworthy, as I'm a big fan of all things Fujairah, the move announcement over the weekend, Total, reported by Jamie Ingram, seeing as he's on the show. I'll give him a plug, doing great work at Meese as always. Total's trading arm, Totsa, from Jebel Ali, moving its trading from Jebel Ali to Fujairah. It's acquired similar tankage in Fujairah and is offering the opportunity for Total to scale up further to serve growth markets in Africa. So a good win there for Fujairah, and as it marches on into becoming a more and more global oil and oil products hub. Thank you so much, Omar Najia, as always, the Bionic Monday morning, Charles Elinas. And I didn't even mention Liverpool. How nice am I, Omar Najia? Jamie Ingram, as always, and Charles Elinas from Holland. Thank you. From Cyprus this morning. Thank you so much for your time and insights. Brent crude oil trading up about 0.5%. All the best.
You'll never walk alone.
A good day, guys.